In today's video, we're diving into Royal Caribbean stock to see what's driving its recent moves and where it could be headed next. Last week, I went on my first Royal Caribbean cruise, the Symphony of the Seas, and it was a wonderful experience, and it made me think about Royal Caribbean as a company and whether the stock was a buy or sell. In the last 6 months, the stock price hit a low of around 164 just 5 days after Liberation Day on April 7th of 2025. Now it's at its all-time high at 279.88 as of June 9th, 2025. In the last 6 months, from its low of 164 to its high of 279.88, it has seen a significant increase of around 50%. This large increase was primarily due to the strong performance in the cruise industry and positive financial results, as well as the company's strong demand for future customers and their current customer basis. If we take a look at this graph, for number of cruise ship passengers worldwide from 2009 to 2027, the expected number is to grow rapidly. From 2009 to 2025, it has also grown very rapidly. This is why Royal Caribbean is a worthwhile stock to take a look at. First, we'll do a fundamental analysis. From 2021 to 2024, Royal Caribbean has been able to increase its revenue by $14,953,000. Most of this coming from passenger ticket revenue, which accounts for 70% of their total revenue, as well as onboard and other revenues such as sales of goods and services on the ships, which are foods, drinks, and shopping, excursions at ports, as well as fees for operating port facilities. Their cost of revenue has also increased by $5,913,000, most of this coming from fuel, which increased by $755,000. Now, their revenue and cost of revenue have increased as they have expanded their ship line or their fleet with 3 additional ships, the Wonder of the Seas, the Icon of the Seas, and the Utopia of the Seas in 2022, 2023, and 2024. Fuel is also a huge cost, with a typical 7-day cruise costing around $1 million for fuel alone. The number of passengers has also increased significantly, with a 12% increase from 2023 to 2024. Their gross profit has also increased, being negative in 2021 to now positive with $7,833,000 in 2024. Their operating income has also increased, being negative in 2021, now at $4,108,000. From 2021 to 2024, their net income has been able to come out of the negative with a $3,403,000 increase. This is a very good sign that they're now able to start producing positive net incomes. Now we can take a look at their balance sheet. They do have a large amount of total assets, this primarily consisting of all of their ships. They've been able to increase their assets from 2021 to 2024 by around $5 million. It is important to note that these assets do have a large depreciation as they continue to sail these ships, and a lot of wear and tear starts to add up on these ships over time. Their liabilities are also high, but that is to be expected, and their liabilities have increased by around $2 million from 2021 to 2024. The next important element is total debt. They do have a very large amount of total debt, although they have been able to decrease it from 2021 to 2024 by $1 million. From 2023 to 2024, they've been able to decrease it by $2 million. Their net debt has also been decreasing, which is a very good thing. I don't really like to invest in companies with large amounts of debt, but in the case of Royal Caribbean, they have been able to decrease their debt, and their total assets can completely cover their debt if anything starts to arise. The last financial statement is their cash flow. Their operating cash flow is very strong, sitting at around $5 million right now. Their investing cash flow is negative, as they have invested a lot of money into repairing and adding new additions to their ships and business. Their financing cash flow is also negative, as they have been repaying a lot of their debt. The most important element of the cash flow statement is their free cash flow, as I use this to value the company in their discounted cash flow statement. Their free cash flow is very strong and was negative in 2021 and is now positive at around $2 million in 2024. In the future, I'd like to see this continue to increase and be positive in order for me to get a good valuation on the company. Now we'll do a valuation analysis. In this chart, we are comparing the price-to-earnings ratio of Royal Caribbean, Norwegian Cruise Lines, Carnival Corporation, and the Walt Disney Company. Royal Caribbean sits at a price-to-earnings ratio of 22.28, the lowest out of these four being Norwegian Cruise Lines at 11.06, and the highest being the Walt Disney Company at 23.61. I like to see a somewhat high price-to-earnings ratio, nothing too high though, but for Royal Caribbean, 22.28 is perfect. Investors have some optimism in the future performance for the stock. In terms of valuation, though, they are somewhat overvalued as compared to their peers for price-to-earnings ratio. The way I see if the stock price is overvalued or undervalued is the discounted cash flow model. In simple terms, it's a tool used to estimate the value of a company or investment by projecting its future cash flows and discounting them back to their present value. From this chart, we can see that the fair price sits at around 88.95. Their current stock price is at 273.99, so they are extremely overvalued. Lastly, we'll do a technical analysis. The stock has seen a very strong bullish uptrend since its pullback in April 7th. It's above its 50-day moving average, 100-day moving average, and 200-day moving average. Looking at the RSI, it is overbought right now, and I am expecting to see a little bit of a pullback from the overbought conditions it's experiencing currently. Fundamentally, the company is very strong. It has great financial statements and has very good fundamental health. On the terms of valuation, it is overvalued, and for the technicals, it is quite overbought right now, and I would like to see the stock decrease a little bit. Now, is it a buy or sell? If you're looking for a growth company, this is a good company to invest in. It will definitely give you a good future performance in the next 1 year, 2 years, 3 years, 4 years, and 5 years. Now, if you're looking for a value investment strategy, this is not the company for you. If you're looking to purchase this company in terms of growth, it pays out a somewhat stable dividend, currently sitting at 75 cents. It's important to note in 2022 and 2023 they did not pay out a dividend as they lost a significant amount of money due to the COVID-19 pandemic. From the financial statements that we saw, they have a very stable amount and can pay out a very good dividend. We saw in 2019 it paid out a very high dividend amount of 2.96, and in 2018 it paid out a very high dividend amount of 2.6. It's a great dividend stock, and if everything goes to plan and we don't get into another pandemic, you should be able to expect a very good dividend from Royal Caribbean. Royal Caribbean also has great current growth and future growth. Year over year, it is at 13.66% growth. Their forward revenue growth is sitting at 12.44%, so you should expect great growth from Royal Caribbean. Now, if you are looking to buy this stock, I would wait a little bit. It is overbought right now. I'd like to see a little bit of a pullback, maybe bouncing off that 50-day moving average or 100-day moving average, and then buying that, and the stock should hopefully start to rebound. But 100% this stock will have great growth in the future if everything goes to plan. Make sure to click the link in the description for my Discord. All users get free access to my previous trades, news, the economic calendar, and a community chat. Right now I am offering a 3-day free trial on my premium services, which include long and short ideas, premium videos, newsletter, and much more. All information is in my description, my Discord, or my website. Thank you guys so much for watching. Please hit that subscribe button, like, and comment.